Hey everyone, welcome back to Corporate Decoder, the place where we turn corporate mumbo jumbo into something you can actually understand. Today we're diving into Agrify, Corporation's latest filing. Get ready because this one has more twists than a pretzel factory. We're looking at an 8K filing, which is basically a company saying, hey, something important happened and we need to tell everyone right now. This one's dated March 19, 2025, so it's pretty fresh. Agrify Corporation is the company we're focusing on. They're incorporated in Nevada and have a file number of 001309946 if you're into that kind of detail. Basically, this report is coming from them. This report is about things that happened on or around March 19, 2025. So let's see what was so important that they had to file this. Agrify has its common stock listed on the Nasdaq Capital Market under the ticker symbol AGFY. This means you can buy and sell shares of Agrify. It's good to know where to find them if you're considering an investment. Okay, the first big news is about an agreement. Specifically, it's about the shared services agreement with Vision Management Services, LLC. Now, this is where it gets interesting. Vision Management Services, or VMS, is a subsidiary of Green Thumb Industries, Inc. And here's the kicker. Green Thumb indirectly owns 34% of Agrify's stock, so they're getting help from a major shareholders company. VMS will essentially be providing the services of a chief financial officer or CFO. Agrify will pay VMS monthly fees based on their cost, but it can't be more than $72,552.10,552 boozer and $1,242 per of an and of Eddie Wiment last 1 year and will renew automatically unless someone says stop. Either party can end the deal with 90 days notice. Next up, the report mentions releasing their financial results for the last quarter and year of 2024. So they are sharing their numbers, and this is always something important to watch because it can affect the stock price. Let's dig into the numbers. Now we get to the people part. On March 19, 2025, they appointed Brad Asher as their new chief financial officer. Brad Asher is taking over as CFO officially starting March 24, 2025. This means he's in charge of the company's finances. He's not getting any direct pay from Agrify because he's being paid through the agreement with VMS that we just discussed. Before joining Green Thumb and Agrify, Asher was the CFO of Air Wellness Inc. from November 2019 to March 2025. Before that, he was at Ignition One, and before that at KPMG, the accounting firm. Finally, there are exhibits which are documents attached to the report. Exhibit 10.1 is the Shared Services Agreement with Vision Management Services. Exhibit 99.1 is the press release about their financial results. The interactive data file basically contains all of this information in a machine-readable format, which is good for the robots. Now let's zoom out and see what's actually happening here. Agrify is bringing in a CFO through a somewhat unusual arrangement with a company connected to one of its major shareholders, and this could raise some eyebrows. Is it the best way to run things, or is there a conflict of interest? The answer might depend. Also, keep in mind that Agrify is an emerging growth company. This means they have certain exemptions from regulations, but it also means they're still developing. Based on this report, Agrify is making some big moves with its leadership and financial arrangements. The connection with Green Thumb Industries is something to watch closely. The company's performance and future success will depend a lot on how these changes play out. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more Corporate Decoder action. Until next time,